this account here at $10,000, why would somebody with a $300,000, $400,000 car be trading a small $10,000 account? If this guy was really who he says he is and what kind of type of trader he is, he would be trading a $100,000, $200,000, $300,000 account and making profits like this.
All right, so we're April 6th. The virus is still spreading. The majority of everybody's still working from home, but the markets are going nuts. So today I'm going to be talking about high risk trading and how to properly do it, because there are a lot of people losing money and there's a lot of people that, well, some people that are actually making a fortune during this time. So I feel like high risk trading is something that a lot of people are thinking about right now, because some people have lost their jobs, some people don't have a good source of income right now, and so they're looking to the market because of how volatile it actually is to really start learning or to start profiting. And unfortunately, not profiting just a little bit like an investment plan. Some people are looking to actually replace their income, which is a big, big mistake. And so in this video, I'm going to be talking about how to high risk trade properly. And that doesn't mean trying to properly meaning replace your income. It means that this is still money that you can afford to lose right now. And that's how trading should be looked at, whether it's low risk or high risk or anything. So what is high risk trading? You might be wondering. That is anything over 5% profit every single month. Now, some people are going to disagree with me on that because they're going to think that's just so low. But think about it from investment standpoints. That the majority of investing out there, tools and things like that, usually a good investment is 10% per year. And so if you're talking about 5% per month, that is still really good, really good. So don't let YouTube and other places skew your vision on this because 5% is a lot of profit, especially when it's compounded. So what is high risk trading? Well, pretty much what every single person is doing online right now because they're trying to make more than 5% per month. So if you're trying to make that over 5%, how to properly manage that so it actually makes sense and you have a good chance of actually having some takeaway profit trading like that. So that's what I'm going to be covering in this video. Hopefully you guys enjoy it and can follow along.
So today I made an unfortunate trade. 15 years I've been doing this, and every once in a while I'll make a mistake. They're getting fewer, but they still do happen. I took this trade on the Aussie CAD and thought that if I just had some really good discretion, made sure that everything checked out on this trade, I had a really high win chance on this position. And it turns out that it doesn't matter how great the trade looks, we can still lose. It's just the nature of trading. We make a prediction, and sometimes that prediction doesn't work out. So I'm going to come back to this trade in just a second, but first I wanted to cover this person on FX called FX Daniel Savage on YouTube. He's got a channel. He's got about 7,000 subscribers. He claims to be a pro FX trader. He owns a $300,000, $400,000 McLaren, and he lives this particular lifestyle and claims to be doing all of this through Forex trading. So I'm not going to show you a bunch of his videos because they're pretty long and there's a lot. He's pretty heavy on the language as well, and so I'm going to just show you one part of his video that really breaks everything down and kind of shows the true person and trader that he is. So let's forward through that to about 9:20.
Listen to music, man. Hope everybody has a good day, man. We chilling, baby. We chilling. We making that money. Everybody, peace out. And
All right, so here we have him showing his account. $10,000 account, 5,000 profit, balance is 15,000. I think that this is a real account. I think was real profit that was made. Who knows if it was by him? If it was, how many accounts did he blow or basically margin out before getting this? I see this over and over again with YouTubers. It's basically, I would say 90% of those people that have channels on YouTube are showing trading profits like this, where they turn a small account into something big, or rags to riches, all that kind of stuff. A lot of production value in these videos showing fancy cars, and it's just really unfortunate because it gives everybody the wrong idea of what trading really is and what high risk trading means. Because this is high risk trading, whether you like it or not. Anything that's trying to profit, or any system or strategy that's trying to profit more than 5%, is considered high risk trading in my book. And this account here at $10,000, why would somebody with a $300,000, $400,000 car be trading a small $10,000 account? If this guy was really who he says he is and what kind of type of trader he is, he would be trading a $100,000, $200,000, $300,000 account and making profits like this. And maybe even posting a tracked account to prove to people that he is what he is. But he doesn't have anything like that. He's trading small $10,000 accounts because he likely knows that trading like this is going to blow a large account, and he doesn't want to take that risk. So he's just going to show people a smaller account size and him making 50% profit after he likely probably lost a lot. Now, I don't know if he's lost a lot of money. I don't know. But that's my speculation because I know how this type of trading works, and I'm going to even show you it now with my trading. So this is what happened. Okay, so we have our position here, right? Trade 1, lot size, 1 lot on a $1,000 account. That is the mistake right there. It doesn't matter where I bought the position. The mistake is a one lot position. Second lot trade, tried to keep it even. But the problem is I didn't have any extra margin. I ran a margin, 124% margin. So that's my big mistake. It doesn't even matter if this actually ends up turning back around and going back into my profit. Okay, that's not the point here. The point here is my position was taken right on this R1 level with the trend moving downwards. My initial thinking was, okay, we have a gap, a weakening gap, and if any of you guys know trading, you know that a lot of times when there's a gap, that gap is not all the time, but a good portion of the time is recovered. That gap is recovered, the space, and the market does cover that gap, and then we don't know what happens after that. The gap was covered a little bit, about 50% of the gap was covered, and it shot back up after that, right? So I was thinking that if I entered the position here, retested this zone up here on the R1, that we would likely have that continuation to recover the gap and continue with the trend. Boy, was I wrong. But everything checked out in the right way. I liked the position. I still agree with the position, but I don't agree with the risk size that I took on it. And that's that same mentality that I still sometimes fall into. This idea of these traders on YouTube and other places claiming these big profits, and somehow that still kind of sticks with me. Why do I want to be this type of trader? I don't get it. Is it because I want to prove to myself that I can do what these people can't, or do I want to be included in the same crowd? To be honest, I think I want to just see if really changing my perspective or making sure that this is the best trade possible, if my discretion is clean and crisp and clear, that maybe I could turn in a high risk trade into a lot of profit with a tight stop loss or something like that. So I was thinking that at this point, with my skill set and knowledge, that maybe if I changed my discretion techniques, that maybe I'd have a chance at actually being able to have a big trade like this to show people. But then I realized that, look at this. It doesn't work out. It doesn't matter how great the trade is. It doesn't matter how much research you do on it. It's always going to be a prediction, whether you like it or not, and that trade has the potential of losing or going against you. There isn't good trade, bad trade, and great trades. The only way we tell the difference between them is if a trade loses or wins after the fact. It's impossible to tell if it's a good trade or a bad trade when we're taking it, because we don't know the outcome. So, with that being said, how do we actually do high risk trading? We don't do it like this, like I did today, because that doesn't allow you any space to make this trade into a winning one. The stop loss would have to be too tight. You'd lose a lot of money, because ultimately, it's easier to profit 1 pip rather than 2 pips in the market. It's always easier to take a smaller amount of pips when it comes to Forex trading than it is a larger amount. That's always going to be the case, and that's a fact. So when it comes to trading and how to properly trade high risk like this when you're trying to make more profit than 5% every single month, these are the things that you should do. And this is really low budget, just using a WordPad here, guys. It's nothing that you should be impressed with. But yeah, how to high risk trade. Make weekly withdrawals is one. So if you have a strategy, a scalping strategy that trades a lot of times per week and makes a weekly profit, I'd recommend making weekly withdrawals. If you have a strategy that trades a few times a week, or a few times, yeah, a few times a week, not every single day, consider making monthly withdrawals. But you're still making withdrawals, regular withdrawals, which is really important when you're trading like this, which is probably the good majority of you watching this or out there trade trying to make more than 5% every single month because of the unfortunate information that we get online that shows us that 5% is too little somehow, which it's not, especially when it's compounded. Don't risk too much to the point of breaking the strategy. I see this all the time, even with my trading strategy that you guys probably know, the RMI EA Pro. This is a high risk trading strategy that you can get on my website. You can even demo trade it, and it claims 30 to 6% per month, which is possible. But you gotta use these guidelines, not only with my RMI EA version 3.5, the Pro version. You got to do this with any strategy, whether it's manual trading, whether it's a system that you got for free online, or you're paid for, or even a strategy that you're working with your mentor. This kind of trading, uh, money management techniques for high risk trading are uh, incredibly important in you being able to profit over the longer term trading like this. All right, so don't risk too much where you basically break the strategy and it can't trade properly because you run out of margin. All right, so that's something that you shouldn't be doing. Don't overtrade. So if the vendor or the person that's using the strategy or created the strategy recommends not trading, only trading on specific pairs or 3 pairs, don't try to do 6 or 7 pairs because that's going to just overtrade and you're going to heighten your potential for having a losing streak or losing trades and causing a loss. Okay, so number 4. Number 5, don't push the strategy. Past recommended settings. I see this even happening with my RMI EA Pro. Where people are thinking, oh, well, it's so profitable, and the strategy is so great, and I've had a bunch of trades this week. 22 trades this week with a 50.5% gain already with 50 pips. And people think, oh, well, it's profited 1, 2, 3, 4, 5, 6 times in a row. Why can't I push the risk higher and just scale the strategy? The thing is that I have a 75% win rate with this strategy out of 1,040 trades. But those 25% of trades are the ones that are not great trades. And the strategy needs room to make those bad trades into something good. So for example, let me show you right here. So this is the RMI EA Pro, taking its first sell position, looking for the market to go down and scalping that position. As you can see, market didn't. It went back up. We entered more trades, trade 2, 3, and 4. And we finally got that reversal that we were looking for. It just came a little bit later right here. That's a reversal that we were looking for, and it allowed us to pull out all the positions, all 4 trades, in a overall profit. The top 2 trades were in a higher profit than the bottom 2 losses that happened. But because these were at different risk levels, lot sizes, we were able to pull out the profit overall where we did. So that was because we took the number 1 position was at a risk level that was low enough for us to be able to re-enter and correct the bad trade and make it good. But when it's compared to the take that I did on the Aussie CAD, like you see here, I took too high of a position, not allowing me enough room or enough margin to re-enter the trade. I had a second position, thinking that I was seeing some price action in here, looking for the price to eventually start moving down from there. Didn't. but I didn't have any room to enter up here, which I would have. Would have entered right around the 86 level for a better positioning in on the pullback down. And unfortunately, that just didn't happen. I just didn't have enough margin to do that. As you can see, my margin is running really low at 131, and it was even lower before. So this video is about what to do and what not to do. Okay, and I hope that everybody's listening carefully. So I didn't go over the last part, and this is number 6. Trade only with profit after you've doubled your account by 100%. So that means that if you have a deposit, let's say, for example, let's use my expert advisor for an example. So let's say that you purchase the RMI EA Pro and you have a $500 account or a $1,000 account. You grow that $1,000 account to $2,000. Now at that point, hopefully you're making weekly or monthly withdrawals of profit, and you eventually make $1,000 profit overall after a couple months of using the strategy. At that point, you now have withdrawn your initial deposit from at your broker, and now you can just trade with that initial $1,000, but this time it's only profit, so you're not risking anything at that point. That's how you're supposed to do high risk trading. That's how you're supposed to do trading when it comes to trying to profit more than 5% every single month. Make those withdrawals so you can stay ahead of the potential downfall or the crash that will happen. It's inevitable when trading and trying to profit more than 5% per month. You're in for a big blown account. Whether it's tomorrow, whether it's a week from now, whether it's months, a year, it will happen. So that's why when trading like this, you have to make those withdrawals. You have to be smart about it. Don't over risk, because that's how this type of trading can actually work if you're smart about it. All right. If you want something longer term, look for something that profits under 5% per month, whether that's my RMI EA version 8 or some kind of strategy that you're using online that you found for free, or our trading system. All the things that I'm saying here are not just techniques that you use with the things that I'm offering, the expert advisors that I'm offering. They work with any type of strategy, whether it's your own or somebody else's. These techniques are very important and to learn and to understand so you can become a profitable trader or find that edge that you've been looking for. All right. Thanks so much, everybody, for watching. And I hope that you enjoyed this video. Give me a thumbs up. And hopefully you can subscribe. Catch you guys on the next one.